us today for the Nadex application and strategy webinar series. My name is John Skelton. I'm with apexinvesting.com, and we're here today. We're going to talk a little bit about trading some Nadex binaries at key levels, and I'm going to kind of start building on a little bit of a base foundation here on kind of going to focus on some binary stuff over the next several weeks of webinars here, and talk to you about some different strategies. And right now, today, we're going to start off with trading key levels. So let's jump right in, knock out our disclosures. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Information here in this webinar is for informational and educational purposes only. Any trading decision you make is your sole responsibility. Also want to bring up the fact that, I'm going to be showing you quite a bit today of the Nadex demo platform, and any trades that I enter here on the Nadex platform is simply just an example and for education, for me to show you, how to use the platform, how to use the ticket submission, and just strictly as examples to help you see what we're going over today. It's in no way trade recommendation. It's in no way trade advice. Okay. So speaking of Nadex and speaking of demo platform, if you are brand new to Nadex, hop on over to nadex.com. You can go through here and get some great information under these different tabs here. Basically, Nadex offers two different products. They offer binary options and spreads. And you can go to each of these tabs here to get some more information about those products. Today, we're going to be talking about binary options. All right. And right here under trading platforms, you can go right here. You can go straight. Nadex has the online platform. They've got a great mobile app. But right here, demo trading platform. If you don't have one of these, hop on literally right now while we're on this webinar and get one. Nadex will give you a free $25,000 demo trading account. All right. You can select a quick username and fill out your information and hit open demo. And in just a few moments, you'll get an email with a temporary password. You can log right in and log right into the Nadex demo platform. Once you do that, go right up here to My Account, and then right here to Settings, and then you go to Password. It'll let you change that temporary password they emailed you. You can change it to whatever you want. All right, that way it's easy to remember for you. But the demo platform is a great place to get familiar with Nadex, get familiar with the products they offer, and go through the different instruments they offer and look at the different binary contracts on all the different instruments, check out the expirations, get familiar with entering and exiting orders. Any new strategies or systems that you're trying to test out, you can test them out in a demo account. All right, if you're testing something new, you've heard me say it a million times, don't test it with your live money. That's a very expensive education, right? So don't do that. Hop in and trade it with demo. Okay, Nadex is, I have to give Nadex a ton of credit. They do a great job at giving you guys a ton of free tools. In this demo platform and in their regular platform, you've got charts, you've got indicators. They offer you a $25,000 free demo account. Also, if you hop on over to nadex.com, great place here that you need to know about on the website. If you go over here to the Learning Center, there's all kind of videos, trade examples, handbooks, FAQs. Right here under webinars, this will show you any upcoming webinars that are on the schedule, so you can see what those subjects are going to be and get signed up for those. And then right here, webinar archive. If you've missed some past webinars, tons of webinar recordings in here. Right here, if you go filter by presenter and you just take the drop down box and find us here, Apex Investing Institute, you can catch up on all the webinars that we've done over the past weeks. And you can go through here. There's several pages. If you get down to the bottom here, you can go all the way back and you'll find everything from, Basics 101, back to the basics with Nadex spreads. I've got webinars here, Nadex Binaries 101. We really walk you through start to finish. On this webinar today, we're going to be talking about trading at key levels. Some of you might be brand new and feel like it's a little over your head because you're like, man, I'm still trying to figure out what a binary is, how it works. Well, you can go back into here and you can start with the very basics. Binaries 101, I kind of hold you by the hand and just walk you through what is a binary, what does it mean, how does it work? And then from there, we build on, picking the right binaries, top mistakes. We go through range bound markets and trending days and strategies and systems, everything you need to know from start to finish, building from the foundation up, you can find here. And Nadex does a great job of providing you with a ton of free tools and a ton of free education. And that's what this webinar is here today. Okay. Like I said, I'm with Apex Investing. Apex and Nadex, two complete separate companies. Nadex is an exchange. Apex, we're an online education company, a group of traders helping traders. We've got over 20,000 members. We've got, live trade rooms and systems and strategies. We focus a lot of our strategies on risk management and probability. That's why we love the capped risk products with Nadex. And we're an education partner with them. We're traders just like you. And, Nadex has us do these webinars just to offer you free education of who is Nadex, what are they, how do these binaries and spreads work? What are some different ways you can utilize them in your day-to-day trading? Okay, and again, my name is John Skelton. I've been with Apex as head of operations now for almost 4 years. I've got a background in banking and as a licensed stockbroker with Smith Barney. I'm an educator, but I'm a trader just like you. Trade Nadex binaries and spreads on almost daily basis here. So today we're just going to hop right in. Enough about me. We're going to talk about trading live markets with Nadex. All right, but what we're going to talk about is trading at key levels. We're going to talk a little bit about how to identify some possible reversal points and choosing the best option strategy. When it comes to trading Nadex binaries, there's tons of different strategies, tons of different systems. Again, the one we're going to focus on today is key levels. Okay, and we're going to talk a little bit about why those are so important here. And I'm not, we don't have time in this short webinar for me to go through every single aspect of this strategy and system. Okay, I'll show you at the end of the webinar where you can get a lot more information about it. Okay, but I want to talk a little bit about two things. We're going to first of all talk about levels. All right, and when I talk about levels, that can be support and resistance levels. Maybe you're trading Fibonacci levels. Maybe you're looking at deviation levels. Over here at Apex, we have some proprietary levels called our deviation levels. They're a little bit different than the normal deviation levels you're used to seeing. Okay, and we really look at some of these levels because what can happen at levels? Well, levels are very important because the market can be attracted back to those levels. The market can hit those levels and what? Start chopping, right? It hits a resistance or support level, it starts chopping. Or it can hit a level and just immediately reverse. Okay? Or it can hit a level, build a little steam, and blow through it. So levels are very important to pay attention to. Sometimes new traders don't understand that. They just want to look at, bars going up and bars going down, and what does some little indicator say? Okay? And when you're getting close to a level and the market does a little something, an indicator might say something, but the indicator is not taken into account. There's a level there. So you always have to be aware of levels. Okay? The other thing we're going to talk a lot about today is chop. All right? Everybody hates choppy markets, right? Everybody's like, I can't trade choppy markets. Chop is, trend is your friend and chop is your enemy. Okay? And there can be some truth to that based on, your particular strategy or system. Over here at Apex, we kind of look at it differently. Yes, we totally agree. Trend is your friend, and we love trends. But, I know a lot of people are like, oh, I'm watching my charts this morning. It's kind of a choppy day. I'm out of here. I'm not trading. Or, oh, here comes some chop. Oh, I hate chop. Well, with some of our strategies and systems over at Apex, in particular this one that we really utilize, this one and a few others and a few additions to this for binaries, is we love chop. Okay, and the reason is a lot of times what chop is accumulation and distribution, and it's sometimes the big guys, it's either the market not sure what direction it's going to go, but it's about to go somewhere, or it's the big guys really building up their volume. A lot of times chop can be a build up to something about to happen. And it doesn't mean that you necessarily want to trade that chop itself up and down. But when you see that chop coming, and if you can identify it and almost draw like a chop box, okay, you can look and wait for a breakout. So don't be overwhelmed by this chart right here. I want to go through a few things with you, okay? This is an Apex proprietary chart and indicators. All right, so you see right here we've got settlement, and we've got what's called blue and green ice, all right, which are volume levels. We see that the market came up into this level, and what it's doing, it's chopping between these two levels, right? It's just kind of bouncing. All right, now I know I've talked to a lot of you guys that, hey, I like to trade those chop breakouts. Well, what is the one thing, what's the biggest killer for you guys that trade chop breakouts? What's the biggest thing that always hits you? Right here, fake break, right? All right, hey, it's chopping between these levels. I see a little volume building maybe, and oh, it starts to break out. So I, like right here, starting to break out of this chop area. Oh, so I go short because I think the market's going down. And then what does it do? Boom, immediately pops against you, right? Because you're seeing it break out here and you're thinking, okay, what if I got a binary, an at-the-money binary right here, expecting the market to keep going down and so that binary would be profitable? Or what if I get an in-the-money binary up here? Or what if I'm taking a spread? So I want to show you a few ways that we help cut down on that, all right? And then how we utilize that with Nadex binaries, okay? Don't be overwhelmed by all the stuff on this chart here. The main thing I want you to see, and you've heard me talk about this before right here, is VAD volume levels. What is VAD? VAD stands for volume accumulation and distribution, all right? You see this here? Every bar, you have a line down here. This is not bar volume. Anybody can slap, you know, volume up down on a chart. And what that does is it shows you the volume within that single bar. What VAD, or volume accumulation, does, it's measuring the volume in a trend. It's measuring the push of accumulated volume in that trend. It lets you see the strength of a trend, okay? And it kind of lets you see when a trend is kind of dying out, all right? What do I mean by that? As like a quick, kind of easy example. Well, notice these blue bars here, up, close bars. Notice that the market's closing up, you know, pushing up. See this accumulated volume going up and up and up, right? Then it pulls back a little bit and it goes up even a little bit further. So it makes a higher high, right? But look, this accumulated volume didn't even get close to this accumulated volume. So it made a higher high on lower volume, okay? And then the market, it hits settlement and it cannot push through settlement. It hit a strong, important level. Then it kind of comes down and it hits these levels and it's bouncing up and down and up and down, right? Notice every time the market tries to push down, these black bars. See this first push down? See this volume accumulating, okay? And it made a pretty good push down, right? In volume. But it couldn't break through that level, could it? See that? It pops back up. Then this next push down. See this volume level? Not even as much as the last one. Then this next volume push down. Not even as much. And right here it makes a big push down, even kind of breaks out of the chop box, right? And so you think, oh, it's breaking out. I'm going to go short with a binary. Okay, what I want you to notice is here on this last push down that actually broke through the box, you see this VAD volume building, right? But notice it never broke the same level of volume as back here. Do you see that? It pushed down through, but it didn't really, you know, push down with a lot of extra volume. Does that make sense? So if I'm looking at a level in a choppy area and I want to take the breakout, what I'm looking for with that breakout trade is not just a little volume, not just about the same volume as the last push within that box. I'm wanting a big difference in volume. I want to see volume start to build and really be exceeding all these previous volumes when it breaks out. And that is going to help protect me from a fake breakout. Okay? Does everybody understand that aspect? Does everybody understand what I'm kind of showing you up till now? Raise your hand real quick if you don't. Let me know yes or no. It's very, very key that when you're trading these breakouts at levels that you understand this. Okay? All right? So everybody sees that. So can you see in this example, you can understand how the market's chopping between levels. And you can see right here, You understand what this box is? I'm kind of drawing a chop box, right? Something I really like to do, something we talk a lot about at Apex is, okay, where's the market chopping? I want to visually draw a box to see, okay, that's the area it's chopping in, and I want to be able to see when it breaks that box, right? So can everybody see how as it's breaking this box, I might have been tempted to sell and to go short, right? Because it's been in between this box, been in between this box. Oh, look, we're breaking out. But can you see why I might not have done that, or I wouldn't have done that looking at these indicators here? Because it broke through, but I'm not seeing a big difference in volume in that breakout, right? And it was a fake break, right? Because it went down a little bit, and then what did it start to do? It came up. So how many of you, just quick show of hands, have gotten caught in a trade like this, where there's choppiness, and then you see a breakout, and you get in it, and it turns out to be a fake break? The market went against you, and you lost. We've all done it, right? We've all done it. But can you just see why I would not have taken this particular one based on what I'm showing you here? Can you see that? If you can't, it's going to make a lot more sense right now. Do you see this screenshot? The market's chopping here, it breaks out, and then what? You start to see bars going up against you, right? Look at this next screenshot. It's the same exact chart. Do you see it? Remember? This was the chop break, or this was the chop area. This is where it started to break out. Short, right? But remember, volume was not exceeding here with this fake break. And then what happens? The market starts to come back up and up and up. And right here in this area, what does the market do? Right here, the market breaks the top of the chop box. Does that make sense? Right? It does a fake break. Okay, and you'll almost always find, okay, that the market almost always does at least one fake break with these good trades. Sometimes two, though. Okay, but what is the difference here? So it made a fake break going south, and then it starts to come back up. And then see right here, as it's breaking out of the top of this chop area, what do you notice down here? Okay, remember these, okay, so look at the pushes to the upside, the blue bars, up, up, up. Look down here. What is the accumulated volume level? What is the next push up? Very little volume to the upside, right? Look at these here. Here it came up almost to the chop box, like it came like right to the top of the chop box. It made the top of the chop box with, look, very little volume. You see that? And then it does a fake break. And then as it starts to come up, what do we notice here? A little volume, a little more volume, a little building volume. We notice that it's building in volume. And then when it's breaking here, see at this breaking point, see this little wick? Like it gets up here to the top of the chop box, and what does it hit? It hits resistance. Like, no, no, no. And it pulls back a little bit, but then it ends up going back up, and it closes up, and it breaks that chop box. And we've been on this webinar for 17 minutes now. I probably spent the first 7 or 8 minutes just going over introductions. So you've probably had, say, a 10-minute education here. Do you already see what I'm talking about? Like, can you guys see this? Is that clearly breaking, building, and very much so, this accumulated volume is very much so exceeding all of these. Okay, and notice I'm talking about the volume to the upside, right? This push up, this up close bar, these push up. You see the accumulated volume with our proprietary VAD indicator. It's very clearly different here. It's very clearly exceeding, right? It's very clearly got a lot of steam behind it. And when you're trying to get up, get out of a choppy area, get out of a mess, you need some push behind you. You need some volume. You need some steam to what? Make it up the mountain, to break away from all the other crap, right? See, it tried to break this way, right? Away from all the junk. But did it have a lot of steam behind it comparatively? No. And it reverses on you, but when it breaks here, you've got some steam. So what is your expectation when you're between strong levels? You're bouncing between the levels. You can't break through. You try to do a little fake breakthrough, but you just run out of steam. And you go the other way, you hesitate a little bit and break through with a lot more steam. That market takes off. Okay? So there's a kind of quick 10-minute education on part of one of our binary strategies that we use over at Apex. And it's probably the strongest binary strategy that I've personally ever used myself, because we're combining a lot of things. We're combining the breakout of chop, we're combining strong levels, and we're combining volume. Okay? Everybody, does that quick little strategy make sense there? And can everybody see how powerful it is to be able to identify these levels, for one, identify the chop area, but also to really identify the accumulated volume, right? It's extremely powerful, okay? Now that we see that setup, okay, what are we going to do with it? All right, well, a couple of things that are very important here when you're thinking about trading binaries with this. Look at, okay, see right over here was the beginning of this kind of choppy area, right? Look down here at the timestamp. Like this was midnight. This was 5 a.m. All the way over to here was about a little after 10 a.m. So you see all this area here was 10 hours. You see that? Just from this area right here at 8:49 to this area here at about 10 was an hour and 10 minutes with just these bars right here. You see that? But right here where it breaks out, okay, which is right around 11 o'clock, it moves from here to here within the 11 o'clock hour. Okay, so another thing that you'll find quite often is when you have this kind of chop at strong levels, it can take a while. But when it makes that break with this type of volume, it's going to go pretty fast. Okay? Now, let's say that this break happened at, let's just say it happened at 10:45. Like we can't see the exact timestamp here between these two. But let's say right here was 10:45 in the morning, right? Well, with Nadex, we know that we've got a binary that's going to expire at when? 11 a.m., right? 15 minutes later. Right? Everybody understand that? So we know the market's probably going to move fast out of this chop area. But we've only got 15 minutes left till 11 o'clock. And notice this bar right here that broke out had a little pullback, right? And then a couple of hours later, you see that little bit of a wick right there? Can everybody see that? Like, is that clear on the screen? You see that little bitty wick right there? And then the bar closed up and kept going. Something you'll find a lot that happens is as the market's breaking out of the box, right? Like, see, basically this level, let's just call it, settlement, this level right here. That's kind of the break of the box. See, as it got up there and as it's trying to break, you've got some people trying to say no, no, and pull you back down. See that wick? But it's like, nope, we've got volume, we're going. And it breaks out of the box. A lot of times what you'll see is a couple of bars later, it'll make one more little test back into the chop box area and then go and take off. You'll see that a lot. Does that make sense? Like it fights to break out and it breaks out. And it's like, wait a minute, no, we don't want to go. All right, yeah, we're going. Does that make sense? Can everybody see that, like on the chart and in the bars there? Can everybody get that concept too of we're going to fight to let you break out? Okay, you broke out a little, we're going to pull you back. And it's just like building more steam and then boom, like a slingshot, right? Or like pulling the bow and arrow back. So two important things there. For one, let's say you missed for whatever reason. Let's say you missed that initial breakout of the chop, right? And you think, oh man, I missed that trade. Okay? Not necessarily, because if you, first of all, if you miss that first break, almost always you'll have a little pullback into the chop, and then it'll come back up and close up again, and you could get in there. So first of all, does that make sense? If you miss the entry at the first break, look for that little pullback, and then you could get in. Okay? Everybody see that? Maybe you're looking at another chart or you had to step away. So if you miss these first entries, don't freak out. Don't freak out thinking, oh man, look at that huge run. I missed it. My day's over. No, no. Take a breath. Hold on. It's probably going to do a pullback, and then you can go. All right, so that's the first thing you need to see about that. The second thing is this. Let's just say that right here at the break was 10:45. So I had 15 minutes to go till expiration. And let's say that I wanted to buy an at-the-money binary. All right? And I think we all know what an at-the-money binary is. If you don't, go to the webinar archive there and check it out. But what an at-the-money binary is a binary that is priced right around 50 bucks. Okay? Because the strike price is right close to the market price. So if I can risk 50 to make 50, right? But what does that mean? That means I bought this binary at 58.36 and the market's right at 58.36. Correct? So what does the market have to do? Well, I'm saying that the US Tech 100 will expire greater than 58.36 when? At 2 p.m., right? If the market expires at 58.35, what happens with this contract? Like if I were to buy this right now and the market expires one tick below, is this a profitable binary or not profitable binary? Who can tell me that? Just by one tick. Exactly. Right, it would be a losing trade. Okay? So, my point to that is, if this first break happened at 10:45, and I buy a binary right here, like at the money, and I've only got 15 minutes to expiration, and I know that this binary could, be profitable or not profitable based on one tick in the next 15 minutes. Everybody with me? So at that break, if I was to buy this binary right here with only 15 minutes to go, at this break, what do I know is probably going to happen within a couple of bars? We just talked about it. Another pullback into that area. And when did that pullback happen? At 11:05. Okay, well, all right. Leonardo, what time chart are you using? Okay, this is not a time chart. This is not a 1 minute or 5 minute. It's our Apex diagnostic bars. Okay, they're tick bars. They're based on movement of the market. One bar might take 1 second, or it might take 5 hours, just to, for the market to move 5 ticks. But this bar closed at 11:05. So this bar closed up. This bar started to form. The market came down and up and down and up. So what is the chance of right here at 10:45, I buy, and when this bar is kind of coming up and down, there's a probability that it could have been down 1 tick below my strike at the 11 o'clock expiration. Does that make sense to anybody? Did I lose anyone right there? If you didn't fully get that, tell me so I can cover it again, because it's huge. It's huge important. Any questions on what I just said? Does everybody get that? Because we know at the break, we know a few bars later it'll probably pull back. Okay? All right. So Pradeep, so we understand, right? There's a break, and then a few bars later it will probably pull back. Right? So we understand that. So right here at the break, if I buy a binary right here, and it's only got a little bit of time till expiration, well, right before it expires, the market could pull back and be below my strike price, right? Let's look back at the Nadex platform again here. Let's just say this binary right here, where's it at? 58.31 is the binary. The market's at 58.33. Let's just say we only had a few minutes until expiration, and during that few minutes, the market decided to do a little pullback. And it was pulling back right at the top of the hour, and it pulled back to 58.30. And at expiration, I lost on this binary because of 1 point, because of 1 tick, because of this little pullback right at expiration. Okay? So if I'm making this break right at 10:45, and I want to buy a $50 binary so I can go 1-to-1, right? So if I've got 15 minutes left till the 11 o'clock expiration, do you think I want to do that? Or do you think I want to buy a $50 binary at the 12 o'clock expiration? That way this little pullback is not really messing with me. I'm letting it go. Because why? Because I expect this pullback. Okay? Does that make sense, guys? Can you see that? Because check this out. You could be looking at this. Does that make more sense now, Pradeep? You see what I'm saying? Because you expect a little pullback. So if you've only got a few minutes to expiration, don't take that one. Go a little further out. Okay? Because what will get you is this. All right? Leonardo says, so do you not trade the 20-minute binary? Do you trade the half hour? Leonardo, I would only, in this situation, I would only trade a 20-minute binary if, like right here at my break, my initial break, if it was literally at the top of that 20 minutes. Like it broke right at 10:40. So I had like the full 20 minutes. Okay? Or after it made this pullback into the zone and closed back up, I would look at doing a 20-minute there because I know it already made that first pullback that I'm expecting. Does that make sense? But I would still want to have as much of that 20 minutes available. Okay? Because here's the key, and that's a great question, Leonardo, because, okay, like, we have like a training course on this full system, that's, a few hours long. And we actually put a few other things into this system. It's a great system. But you can have, and you guys just after a few minutes can see this. You're like, wow, that's a powerful trade setup. But if you go in here and choose the wrong binary, you can totally just it could be a flop. Does that make sense? Like, look at this. You've got a perfect setup. Breakout. You got levels. You got chop. This VAD indicators tells you when to get in and when to not get in. It's perfect. I'm looking back at this chart going, oh my goodness, look at that move. Look at all the money I would have made. But then when you're trading it live and you take the wrong expiration binary and you lose on it, you're going to be pretty disappointed, right? Okay, so there's more to it than just learning the indicators in the chart. You got to make sure to get the right binary. But it's twofold here. You don't want to get too close of an expiration and you lose when it pulls back against you. You don't want to get too far out of an expiration where it doesn't move, where the binary value doesn't move fast. Okay, so keep in mind, remember, this box is how long? 10 hours. This move was 1 hour. So this move is going to happen fast. So if it's 10:45 in the morning, do I need to buy the daily expiration that's 5 or 6 hours out? No, because the value of that binary is going to move very slow if I get a daily expiration. I want to get a close enough expiration for the value to move fast enough to take advantage of the move. But I want to have enough time to let it make the move and not pull back against me. Does that make sense? Okay. Margot, I lost many trades due to not being aware of this. Thank you. Great, Margot. Thank you. Now, do you mean you've lost trades to not being aware of giving it enough time, or not being aware of thinking about the pullbacks? Does that make sense? Both. Okay. So I want to show you some examples of what I mean. And for some of you, they're like, I don't understand what you mean by these different expirations and times. Let's take a look at a few things here. Okay. Real quick. Here's just another quick example of at a level, we're chopping. Okay. You may not be a seasoned trader, and I don't fully always understand when the market's trending or when the market's chopping. Is this trending straight up? Is this trending straight down? Or do you got a few bars down, a few up, a few down, a few up, a few down, a few up? Around a deviation level, VAD up, VAD down, VAD up, VAD down. Right here, what happened? This VAD volume did push out lower with more volume than these last couple, didn't it? See that? But look, it could not break the box. You see that? There was a push in volume, but it couldn't even get lower outside the box. One more little pull up, and then what happens when we're breaking the box? Boom, 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 boom. See it? It's not that hard to see that. Okay? And again, look, 6 in the morning until what? 9:30. It's 3 hours of that chop, building steam, building up, ready to go what? Boom. And what is this? 9:40 to 10:05. This was hours. This was 20 minutes. Okay. Now this particular one didn't make a big pullback right here. Okay. But right here, you're around 9:40. You don't know if it's going to make a pullback. So you could have gone for the what? 11 o'clock. See, this bar right here is 11:39. So 11 o'clock was somewhere in here, and you'd have been profitable. So don't give yourself, make sure to give yourself enough time to be right, but don't go hours and hours out. And I want to show you why. Okay. So in this type of trade setup, I'm normally looking to go like a 1-to-1 risk reward ratio. Okay. So like on the buy side, I'm going to look to buy anywhere from like $30 to $45 and then immediately set a take profit order for a 1-to-1. What does that mean? Well, if I bought at 40 bucks, I'm going to buy it for 40 bucks, immediately place a take profit order at 80 bucks to double my money. I'm not going to wait and hold it till expiration and try to squeeze out every little last dime, because what if the market comes back, right? I'm looking for these great setups, take the good setups, the good moves, double my money, and low risk. Risk 30, 40 bucks, okay? Now, let's talk about making sure you have enough time to be right. And we can do that by looking at the Nadex ladder, okay? So you can go in and whatever it is you're trading here, let's say you're trading the US Tech 100. And, so like right now, it's 140. We've got 18 minutes left on these binaries that expire at 2 o'clock. So just for example, let's say there was one of these setups right now. And I can look and say, okay, well, I like this strike right here. I can get it for about 33 bucks. I can set my take profit order for 66 bucks, double my money. But I've only got 18 minutes left for the market to make its move. And I know it could pull back a little bit. And I'd be getting a strike at 58.44. Well, what do I got with a little more time at 3 o'clock? Okay. And what was that? I'm sorry, 58.44. Okay, so at 3 o'clock, I've got a 58.43 that I can get for about 46. Or I've got a 58.47 I can get for about 34. And I've got an hour and 17 minutes. Maybe I want to give the market a little more room, right? A little more time to make its move and get through any little pullbacks. Okay, does that make sense? But do I need to go all the way to the daily at 415? I may not need to do that, or a weekly, right? Because I'm not wanting to hold this till expiration. I want to get in for around 30 or 40 bucks. I want the market to move to get it up to being worth about 80, and I want to get out, right? The further you go out in expirations, the longer it takes for the market to move. Or I'm sorry, for the value of the binary to move. Let's just look at a quick example. This binary right here, 35 bucks, right? What's the strike? 58.48. Okay? So if I want to double my money from 35, I want to get out somewhere around 70. The market's got to move somewhere to like 58.28, right? So it's got to go from where? 48 to 28. Does that make sense? So I'm buying this one for about 35. It's down here at this level that I can get out at 70 to double my money. So the market has to move how much? 20 points to make that difference of value move on the daily. Why? Because I have a lot of time. The more time to expiration, the slower the value is going to move. Make sense? So a $35 move in value would be 20 points. Everybody see that? Say something if you don't see that. Does that make sense? $35 move, 20 points. Let's look at 3 o'clock expiration. If I can buy this one for about 37, right here, get out at 70. What is that difference? From 31 to 43. That's only a 12-point move. Big difference, right? Okay, what about the 2 o'clocks? Well, I can get something for 20 here and get out at 64. I mean, that's more than doubling my money. Like, with just what? 4-point, 8-point moves. So the shorter time till expiration, the quicker your value will move. The longer time to expiration, the shorter your value will move. Does that make sense? You can go back and check out some of those webinars about that as well. So you want to give yourself enough time to be right where you're not too close to the next expiration, right? But you don't want to give yourself hours and hours to where you're just not going to have a quick value move. You want to be kind of right in the middle. Does that make sense? And Margot, does that help? Like you said earlier, man, I lost a lot of trades. I wasn't aware of this. Does that help? Because you want to be aware of that first pullback. You want to give yourself enough time to be right, but not too much time to where your value moves slow. Okay? I think I have a couple other examples of this. All right, this is the euro dollar. I pulled up a bunch of different expirations on the euro dollar from 10 p.m., 3 a.m., 11 a.m., 3, all the different dailies, right? Okay. And then notice I went in demo and I bought, during this example, the same strikes. See this strike, 0560? Okay, I've got 11 a.m., 11 p.m., at 3 a.m., at 3 p.m., at 7 p.m. I bought all the same strikes, but at different expirations. And you see here, we got 21 hours, 5 hours, all kind of different times left to expiration. So I immediately bought them. They're all showing down in value right away because of the bid-ask spread. So look what happens over time. Okay. Notice the market moved against me when I bought. A little while later, the market started to go down. Which one of these has the highest loss showing right now? Well, the one with the quickest expiration, right? Because my price is moving, because my price is moving faster, the closer I get to expiration, okay? Whether it's moving for me or against me. All right, does that make sense? Notice those further out expirations are moving slower, right? Everybody see that? So either for you or against you, it's going to move faster the closer to expiration. Now let's look. Okay, hey, it starts to go back in my direction. All right, now which one is up the most in profit? The one that has 17 hours, 13 hours, 9 hours, or 1 hour and 50 minutes? Boom, 1 hour. Look at this. It's the same strikes. See that? The same strikes. The market's going in my direction. The one with the least amount of time to expiration is up $14 in profit. This one that's way out 17 hours is still even in the negative P&L. Do you see that? Does that make sense, guys, what I'm showing you here? How when you go too far out, your value is going to move slow. Okay? And also when you go so far out, let's just go back here. Okay, I don't want only 15 minutes, right? Why? Because the market can pull back. So I want a little longer. But do I want hours and hours? Because what can happen? Remember, 10 hours, 1 hour. The market could come way back down, right? I don't want to wait 7 hours for an expiration, or 7 hours for the binary to move in value, because after 7 hours, that market could go the other way. This trade setup, when the market moves, it normally moves quick. So I don't want just 10 or 15 minutes, but I don't need 3 hours either. Because if I go too far out, it's going to move slow on me, just like this. Do you see that, guys? I want you to be able to see this visually. That's why I took all these screenshots. So this is not some guy on a webinar just trying to tell you whatever. You know what I mean? Like, I want you to see it on the platform here. Okay? So, you know, Leonardo says that the sweet spot 1 to 2 hours for the binary scalp. You know, Leonardo, what I normally say is I want at least 20 minutes. Okay? But I prefer to have 30. I want a minimum of 30 minutes normally, myself. Okay? So that might mean that if I'm in the bottom half of the hour, I can take that current hour expiration. Or it may mean that I need to go out to an hour and 30 minutes. You know what I mean? I don't want to have less than 20 minutes or 25 minutes. And you know what I mean? Like, I want to give it time to make that move and get through the pullback. But I don't want to go out like way far. And this screenshot shows you why. Let's keep looking. All right, now the market's moving a little bit more. What do we have? 46 minutes to expiration. Remember, they're all the same strikes. 46 minutes to expiration. What are we up? Up $39 on our profit. But on the same strike that has 16 hours to go, I'm up $5. You see it? I don't want just a few minutes that's going to catch me in a pullback, but I don't want to go hours and hours, right? I mean, I'm getting close to being able to get out of this trade for a good profit. Here, I got another 16 hours to go for $5. The market can do a lot in 16 hours, right? Keep on going, and you see what I mean. Okay? So, you want enough time to be right, but not too much time to not be able to take advantage of the quick move. Okay? So, okay, guys, we kind of went over a little bit here. Was that helpful, though? I hope this was a helpful webinar and not just a boring, this guy is talking about nonsense that I don't understand. Like, I really wanted you to see the power of all this, okay? Because this is one of the most powerful binary strategies that I've ever used. And, you know, I only showed you a small tidbit of it. We have a lot of other stuff that goes into it. Yes, this webinar that we're on right now is being recorded. If you hop back over to the Nadex website, again, under Learning Center, and you go to Webinar Archives, all right, and you filter right here to Apex Investing Institute, it will be posted right here, okay, along with all these other previous webinars. And you can go back and check out some other webinars as well. Also, guys, hop on over and visit us at apexinvesting.com. Okay, we've got a ton of free education. We've got step-by-step training courses and strategies and systems. We're actually running. Oh, good, great, Leonardo. I'm glad you're in there. Leonardo says, "Oh, I'm in your open house." We're running a big open house right now. You can come in and try out everything for free, and you know, strategies and systems and trade rooms, and you know, these systems that I showed you here. We've got some deviation levels. We've got a ton of information about, you know, binaries and spreads and how to utilize Nadex. So definitely check us out over there. And again, make sure to always keep up here with the upcoming Nadex webinars. You can see what webinars are coming up and get registered for those as well. Okay, guys? So Ed says, you've made this very clear. Thank you. Good, Ed. I'm glad, because if it's not clear and not practical and you can't see it, what's the point? You know what I mean? What's the point of these webinars? Like, you got to be able to see it and understand it and know how to use it. And again, this is a powerful system, but the system is only as good as the binary strike and expiration that you choose. Okay? So they go hand in hand. You got to have both, and we want you to see both. Okay? So guys, hop on over, check us out over at Apex, take advantage of that, all the free education. Make sure to join us on the next upcoming webinars, and we'll try to get this recording up for you very quickly here. Okay? All right, guys, thank you very much. I appreciate it. Glad you enjoyed it, and we will see you next time. Have a good one.